Welcome to the Leaders Insights podcast. Today's episode, Earnings Call Guidance Strategy, a CFO playbook for credibility under pressure. Every quarter, a CFO reads out a number, and the stock either rallies or gets torched. Why does that one sentence carry so much weight?
Because guidance isn't a forecast, it's a promise dressed up as a forecast. When you say, we expect revenue between $4.20 and $4.4 billion, 40 analysts plug that into their models and your stock reprices around it in about 90 seconds. You've just anchored a year of expectations with one sentence.
Start me at zero. What actually is guidance mechanically?
It's the range you volunteer to the market. Revenue, margin, sometimes earnings per share, meaning profit divided across every share outstanding. The company isn't legally required to give it. You choose to, because the alternative is analyst guessing, and analyst guessing is how you end up with a consensus number you can never satisfy.
So why not just lowball everything and beat it every time?
Because the market isn't stupid, and neither are the buy-side folks. The fund managers actually deploying money sandbag too, obviously, and they widen the gap. They model where they think you'll really land, not where you said. Now you're beating your own guidance and still missing the whispered number, which is the unofficial figure floating around the desks. You get punished for winning.
Walk me through the sequence then. How do you set it before the call even starts?
3 moves. First, you set the range internally, and the width tells a story. A tight range signals confidence. A wide one signals, we genuinely don't know, don't hold us to the midpoint. Second, you decide what you'll guide on. Salesforce, for instance, guides revenue and operating margin hard, but stays vague on the back half of the year. Third, and this is the part rookies skip, you pre-decide your defense before anyone attacks it.
Pre-decide the defense, meaning?
Meaning you know the 3 questions that'll hit you, and you've got numbers ready. If your gross margin, revenue left after the direct cost of what you sell, dipped 200 basis points, that's 2 percentage points, you don't wait to be asked. You explain it in the prepared remarks. Volunteering the bad news buys you credibility. Making them dig for it costs you double.
That sounds like theater. Isn't the number the number?
The number is the number, but the framing decides whether they trust the next number. Think of it like a poker player who shows one honest hand early. Everyone believes the bluffs later. Netflix rebuilt its whole IR credibility around 2022 by getting boringly precise on subscriber math after they'd whiffed. Predictability became the product.
Give me the ugly scenario you know you're going to miss. What do you do on that call?
You cut guidance once, cleanly, and you cut it far enough. The cardinal sin is the salami slice, trimming a little every quarter so the market never believes you've hit bottom. Intel did versions of this, and analysts stopped trusting any floor they set. If you're going to disappoint, overcorrect, take the pain in one session, and let the stock find a real level.
And if a competitor just blew up their own numbers, does that give you cover?
A little, but don't lean on it. The whole sector's soft works once. Say it twice and you sound like a manager blaming the weather. The CFOs who survive name the specific thing they got wrong and the specific thing they're changing. Specificity is the whole currency here.
What about tools? Is anyone using software to sharpen this?
Plenty. There are platforms, AlphaSense, Aira, that crowd, that transcribe and score earnings calls. And yes, that's vendor data, so take the precision with salt. But they'll show you which phrasings correlate with a positive move. The uncomfortable finding, hedging words like roughly and approximately, statistically soften the reaction to a miss. Language is doing real work.
Give me the one thing a CFO does differently on their next call.
Before you write a word of the script, list the 3 questions you're dreading most, and put your answer to each one, with a number attached, into your own prepared remarks. If you're not brave enough to raise it, you're not ready to defend it.
That's your 5. The full CFO track, structured, no fluff, is at mba-training.com.